Welcome to Invest. We talk about investing, finance, and professional development. It's the current time of 7:35 a.m. on the Eastern Time on July 14th on Friday. Hope you guys have a good week and also happy Friday. With respect to Ethereum, $1,992, about 0.65% so far. On the overall crypto market, as you can see, with respect to the market on a pre-futures perspective, we are relatively down about 1% respectively on the key coins, and on the altcoins side of the house, we are also kind of consolidating on a sideways fashion so far. And you can see that with respect to Ethereum, as of recent time frame on a daily spectrum, we have seen some elevation from the 1850 mark all the way to the 2000 mark, and the peak at one point was $2,028. What drove it? So it's basically revolved around the SEC news, with respect to the legal court battle, that, with respect to the XRP, surged leading effort after winning the court battle between SEC and the ex-CEO of Celsius. And as that arrest was made, it drives some relief, and also there was some reinforcement with respect to the legal and compliance infrastructure that will be further escalated going forward, which I guess in some way psychologically gives some confidence to crypto investors, which drove the entire market to go up from there. And yesterday, not just obviously Ethereum, but also many crypto related stocks like Coinbase, if you may, also was surging as well. But now the question is this logical to be getting in at this moment right now? Are we missing the boat? So let's dive into technical without wasting more time. With respect to recording time, again, 7:37 a.m. on the Eastern time. Early in the morning, guys. Let's take a look at the Ethereum mark. You can see that we clearly was reaching to a level that, if you look back into our videos, you could see that 2050 mark is a next level of non-subset resistance level. But the real level that you need to get to is 2150, which you could see that clearly we even wasn't even close at all, by like $125 away. So right now you could see that we have formed a golden cross, which translates into this green candle on a daily. The weekly is quite stale, so it's not really moving up or down. But the next level you need to get, excuse me, you need to get to is 2150. So now you want to kind of debate, oh, is it really logical for us to keep going up to this level? How extended are we on a daily right now? A daily, you are seeing that we are at 63 out of 70, so which is, fairly extended, right? And also with respect to the golden cross, it was already captured, which translates into this green candle. Do we have further extensions to keep going up from here? I would say we might touch 2150 again, or 250 to 2050 again, but that's about it, because as you get there, that's a super extended level that this will translate into 70 out of 70. This will translate into an even higher apex. So as you hit that apex, you will have a high propensity to go back down. And remember, whatever goes up really, really fast comes down just as fast. And you can see that this is mainly driven by relief, by feelings, by emotions, psychological effects. So not a true representations of a logical transitions and in an institutional perspective. So that means this is mainly driven by retail investors, not institutional investors. So they could technically pull the rug on us if they wanted to. So something that the dynamic of the situation is not the most favorable for us public investors. So my suggestion is like probably hold off. And if you see a further pump, I'll probably take some profit off the table at as it get closer to 2150. But again, with respect to the daily, it's extended. Weekly is quite stale, but the monthly is quite bullish. So this is indicating that the bull market should be happening around the corner, which is something that we can appreciate. But again, this is gonna be sometimes around like September, October, much later down the year. On the index front, you can see that we're also driving some elevations. So take a look at SPY real quick. You can see that yesterday we reached to a 2450 point, which is very extended. Right now, you can see that on the pre-market perspective, you're also around 45019. Daily looks crazy extended. You could see that we're about to cross up, but we are at 71 out of 70 on a weekly right now. You could also say that we are also very extended, 69 out of 70 with a W shape. This looks just very extended across the spectrum, so definitely something that I worry about. But the monthly is very bullish as well. You could see that, right? We're elevating, but what this is telling us is that months away we are seeing elevations, but daily and weekly are translating into short-term correction. So which logic is makes sense, right? Because it doesn't go up in one shot. So what we need is some correction in near term and then elevations again in later in fall to early next year. So appreciate you for joining me this morning. Hope you guys have a good rest of the week. Just want to remind us on the risk assessments on the market front. But appreciate you. Hopefully you got a had a good summer so far. And let me know if you have any questions. Okay, take care. Bye.